Good afternoon, everyone. Myself, Shweta Jain, Secretary WRC. It's really a pleasure to welcome you all on today's program. And for that, we have with us CA Pareen Shah, speaker of our first session. But before moving further, I request everyone to please put your hand on your heart for the ICI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. Friends, in absentia of our chairman, WIRC CA Murtaza Kachwala sir, let me take this privilege to just give you a brief highlight about our activities at WIRC. So this year, a lot of new initiative we have started. And this year, our main focus on audit, ethics, and technology. We all know that how technology is playing an important role in our day-to-day life. Even our profession is also no exception to it. So sooner or later, we have to adopt technology in our professional work also. So keeping this in mind, a lot of technology-oriented programs we have started this year, Technology Drive Series, which is 5 days in a month dedicated especially to the technology-related program like artificial intelligence, robotic automation process, data analytics, and how we can use these techniques in our work and we can increase efficiency. And a lot of refresher courses also this year we have started so that members can have a in-depth knowledge on that. So ultimately, to increase efficiency in our work, in-depth knowledge is, of course, required. And then ethics and audit. This is our profession. We are professional. So we have to see that we adhere to the compliances and it should be followed in the full spirit. And that is our today's topic is also on auditing standards. And for that, we have CA Pareen Shah with us. So, sir, thank you so much for accepting our invitation and giving your time, valuable time with all of us. So before handing over charge to you, I just would like to brief introduce you in front of our participants for our knowledge of the participants. So CA Pareen Shah is an experienced chartered accountant, more than 15 years in a statutory audit of various listed and unlisted companies and other entities. He is a partner of the firm of CNK Associate LLP and head audit and assurance services and CNK Vadodara. In his professional activities, he cleared certificate course on Ind AS and international taxation, specialized in audit and assurance services. He has handled assignment related to audit of various large listed and non-listed company, providing training and consultancy to corporate related to conversions and implementation of Ind AS IFRS and on company law matters. Also assisting Baroda branch of ICI for providing comments on exposure draft on various Ind AS accounting and auditing standards. He has delivered his address at various forums of ICI on accounting and auditing topics, also Institute of internal auditors, IIA, Baroda chapters, ICWA, and various other forums. Apart from this, he has delivered his lectures to the MBA students also at CK Shah, Vijaypur Wala Institute of Management, Vadodara, on international taxation. Also, he is external examiner for graduation course at the MS University of Baroda. So, sir, with this brief introduction, I welcome you to the WRC platform and request you to please take charge for the session.
Thank you. Thank you, Shweta, for the kind introduction. I think you have elaborated my profile and in a manner you have said to the others. And I would like to thank WARC and the Mr. Chairman Murtuza for giving this opportunity to share my view on the topics. I think we all know the standard of auditings. Standard of auditings we use for the purpose for our daily audits, for our routine audits, for our statutory audits and all that. But the subject which has been allotted to me is SAE, Standard on Specific Engagement. So the standards which we will be going through will be required to be followed when we are appointed to follow certain specific engagements. So I will be sharing my screen and we can go through the standards.
Yes, it is visible.
Yes, yes. So before going through the SAEs, I would like to, for the benefit of the members, I would like to say that, see, many of us might be in a dilemma whether the auditing standards are statutorily required to be followed by the auditor or not. Then let me make it specifically clear that as per section 143, subclause 9 of the Companies Act, every auditor of the company needs to follow and adhere to the auditing standards. So auditing standards in a way are statutory in nature, and it is the duty casted on the auditors or on the chartered accountants to follow each and every auditing standards while they are doing the audits, statutory audits, or while they are performing the specific assurance engagement. So dear friends, what is the specific assurance engagement? The standards which I will be covering first will be the SAE, that is called the examination of prospective financial information. Now, in our practice, we might be required to certify the projected financial statement, which we will be giving to the bankers. Now, as an auditor, whether we can, or as a chartered accountant, whether we can certify the projected financial statement. So that is the basic questions which first comes to our mind. And many of time I have seen practically that people are signing the projected financial statement. They are giving the reports also, but the reports are not submitted in a manner required by this assurance standard. So coming back, what does the Chartered Accountant Act say? So CA Act says that a chartered accountant cannot certify the projected financial statement so as to give assurance that the projected financial statement are correct in every behalf. However, they can give a report on the financial statement considering the assumptions which are considered, considering the various parameters, what are the financial information, what are the basis of assumption. And those whole assumptions needs to be incorporated in their audit report or the prospective financial information. And after that, they can give a report which will be covered under SAE 3400. So when will be the company or an SSE required to submit the projected or prospective financial information? So basically, sometimes the bankers need prospective financial information, that is a project report. They sometimes inquire that yes, as an audit, as an CA, you get it certified. So at that time, we need to follow as an auditor or as a chartered accountant this auditing standard or this SAE. Second thing, in the prospectus, if you see, the prospectus or the SEBI requires the auditor or the chartered accountant to certify the prospective financial information which are incorporated in the prospectus. So when we certify that information, we need to follow the guidance given by this SAE. So what is the purpose of this SAE? The purpose is to establish standard and provide guidance on engagement to examine and report on this prospective financial information. So the prospective financial information will be based on the future assumptions, future information or future inputs which the client will give to us. It also includes the examination of the base estimate and the hypothetical assumptions. So whenever the information, suppose if we say that sales, when we extrapolate the sales, sometimes sales are included in the prospective financial information based on the sales order which are on the hand of the company. So that is a base estimate assumption. However, after 2 years, when there is no sales order, then also we extrapolate the sales in a ratio of say 5%, 10% based on the historical trend. That is a hypothetical assumptions which we are taking. So there is a difference between the base estimate and a hypothetical assumption. Now, this essay is not applicable to examine the prospective financial information expressed in general terms or narrative terms. So what does it mean? Generally, if we go through the annual reports of the company gives in the management discussion, they give the various financials or projections. So this essay is not applicable to that general or narrative information which are given by the management in the annual reports or otherwise. The principle of this standard on auditing should be used as much as possible by the auditor in applying this essay. So see, while complying with the requirement of this SAE, the auditor should also consider the requirements under the other essays. That is the audit evidence, subsequent event, audit documentation, all those other essay requirement has to be fulfilled while compiling the information or while giving the information under this SAE. And particularly, we all know that management is responsible for the presentation and for the preparation of the prospective financial information. And the auditor is required to validate and report on this thing. So as an auditor, we need to validate, and the management is responsible for the preparation and compilation of the prospective financial information. So the basic purpose is clear. Certification will be given under SA 3400 when we are required to certify any of the prospective financial information. So in an engagement to examine the prospective financial information, what should be the auditor consider? What factors should be considered by the auditor, and what are the factors after which the auditor can say that yes, I have taken the appropriate or sufficient sufficient evidence. So the auditor should consider the management-based estimate assumption on which the prospective financial information is based. And we have to see that they are not unreasonable. So if the management are giving their sale or their profitability percentage for the prospective years in a manner which are not aligned with the past information or past historical records, then we can say that it is an unreasonable. And in the case of hypothetical assumption, such assumptions are consistent with the purpose of information. So it should be not that as an auditor or as a practitioner, we should vouch or we should ensure that the based assumption or the hypothetical assumptions are in line with the past trend and they are not unreasonable. And if they are have taken something higher or lower, a basis of proper assumption is given in the assumption note. Secondly, the prospective financial information is properly prepared on the basis of assumptions. So various assumptions has to be listed out. Generally, I have seen that what we do when we certify some prospective financial information, we certify the projections, that is a project report or that. But we need to incorporate the assumptions which have been inbuilt while preparing that project report or while preparing that prospective financial information. So proper assumptions should be given in our report. Then the prospective financial information is properly presented and all material assumptions are adequately disclosed. So disclosure is also required, including a clear indication that whether they are based estimate assumption or hypothetical assumption. So again, let me give you an example. The company is having a plant capacity of say 1,000 ton and based maximum plant capacity, and based on the 1,000 ton capacity, it has projected the turnover of say 100 crores. Now in next year, so that is a based estimate assumption because they can achieve it by their present capacity only. Now from next year, they are taking the turnover to 1500 crores, 150 crores, 200 crores, 250 crores, but they are not giving any proper working or assumption that we will also increase the capacity in all that. So in that case, it will be a hypothetical assumption, and hypothetical assumptions are always risky. Now, a prospective financial information is prepared on a consistent basis with the historical financial statement using appropriate accounting principles. So while preparing the projected or prospective financial information, the companies will also see that the informations which are given are complying with the accounting principles, including the accounting standards. So if certain provisions and that are not taken care while preparing the prospective financial information, then it will not be said that the provider or the management has given us the proper information. Prospective, now definitions. So what is the prospective financial information? It means that the financial information based on assumption about events that may occur in the future and possible action by an entity. So in a prospective financial information, there are some assumptions which the company takes or which the management takes that it will occur in the future, and what will be the possible action by the entity. That is, if the company says that I have to increase my turnover from 100 crore to 200 crore, then the possible action will be that the company needs to increase its installed capacity. It is highly subjective in nature, and its preparation requires the exercise of considerable judgment. So again, there is a linkage. If you see, the management says that we will be installing the new plant and machinery, whereby I will be able to increase my sales. But whether the company has proper funding to increase that capacity, whether the company financials are supportive so that they can go for a bank loan or other loan. So that is a linkage in the financial that should be there in the prospective financial information. A prospective financial information can be in a form of forecast, a projection, or combination of both. So it can be a forecast. Forecasts are based on the document or assumptions which are available with the company, and for which the company is little sure that yes, this will happen. That is, the sales or the purchases or the taken based on the sales order or a purchase order. And the projections is purely based on the past trend or the future activity which the company will be doing. So a forecast is defined as the prospective financial information prepared on the basis of assumption as to future event which management expects to take place, and the action management expect to take as of the date of information is prepared. So in a forecast, the company knows that we will be taking this step. The company expects or the management expect that yes, this will be done, and what are the actions company is taking? That can be demonstrated by way of the discussion in the board report, by the audit committee meetings, or by that the documents which the company has developed. So that is, forecast is more reliable than the projections. Now projection. Projection means a prospective financial information prepared on the basis of hypothetical assumptions about future event and management action which are not necessarily expected to take place, such as when some entities are in a startup phase or are considering a major change in the nature of operation. So generally we see in a greenfield projects, that is a new project if it is undertaken by the company. At that time, they do not have any historical base or they do not have any sales order on hand. What do they have? Just they have the project size. They can give us the data related to the what will be the capital expansion, from who will be the vendors. All other things, sales, or that will be based on the hypothetical assumption in that case. Now responsibility. So the auditor may be asked to, responsibility. Management is responsible for the preparation and presentation of the prospective financial information. They are also responsible for identification and the disclosure of the source of information. So from whatever source, that may be external or internal, from whatever sources they have collected the information or the assumptions, that disclosure needs to be given, and for that the management is responsible. the basis of forecast, and the underlying assumption. For all these things, the management are responsible. Now, the auditor may be asked to examine and report on the prospective financial information to enhance his credibility. Many times, when we see that in the prospectus there are the prospective financial information which are given, which is required to be certified by either by the auditor or by the other chartered accountant as per the requirement of the SEBI. So why they ask the auditor or the other chartered accountant to certify this in, so as to enhance its creditability. Now, the prospective financial information relates to events and action that have not yet occurred and might not occur. So evidences related to same are also future oriented and specific and speculative in nature. Therefore, as an auditor, he is not in a position to express an opinion as to whether the results shown in the prospective financial information will be achieved. So as an auditor, we can never say that yes, the whatever financial information which are given or its creditability, the company will be achieving it. We cannot vouch for the forecast or for the projections. So consequently, in this essay, when reporting on the reasonableness of the management assumption, the auditor provides only a moderate level of assurance. So if you see there is not a reasonable level of assurance, we need to provide only a moderate level of assurance. So moderate level of assurance is little lower than the reasonable level of assurance. Now, once we have decided that we will go with some engagement, then the first step is the acceptance of the engagement. And for the acceptance of the engagement, the company needs to prepare an engagement or acceptance of the engagement report. So the auditor should not accept or should withdraw from an engagement when the assumptions are clearly unrealistic, or when the auditor believes that the prospective financial information will be inappropriate for its intended use. So it is very clear, if at the time of engagement, if you are not satisfied with the assumptions which are given by the management, you should clearly state that they are unrealistic. And if you believe that it will be inappropriate, then you should withdraw from the engagement. So as per the terms of SA 210, that is term of audit engagement, it is necessary that the auditor and the client should agree on the terms of engagement. So whenever we accept this kind of engagements, be very clear what is our scope, what are the assumptions which will be given by the management, whether that assumption will be based on the forecast or purely based on any projections, whether it will be a best estimate assumption or whether it will be a simply hypothetical assumptions which will be given. And after that only you accept this engagement. Because once you accept the engagement, before knowing all these things and afterwards if something happens, then you will be in the trouble. So after accepting the engagement, what are the auditor's consideration? What should the auditor consider while following the their procedures, examination procedures? So firstly, the auditor should have the knowledge of business to evaluate all significant assumptions. So suppose if you are having some such assignment for, say, petrochemical companies, then you should have complete knowledge of that business. What are the assumptions which are there to be considered while projecting the sales or while projecting the revenue or the expenses of that sector? Also, the company should consider the period covered. See, it will happen that the projections will be, sometimes they will ask for the projection of, say, 2 years, 3 years. For example, when you go for the banker's loan, then if there is a term loan, then bank will ask for generally 7 years or 5 years, whatever will be the period of that loan. So period cover is also very important, because after some period, the best estimate assumptions will become the hypothetical assumption. In the earlier periods, whatever data will be given will be more reliable. But no one can project after 2 or 3 years. So whatever figures or whatever assumptions will be there after 2 to 3 years, they will be almost on the line of hypothetical assumption and not the base judgment assumptions. So factors to be considered, firstly, the auditor should vouch that whether the internal control over the systems used to prepare these financial informations are suitable or not. So accounting software which the company is using, whether the experience and the expertise of the team is there, for the preparing of this prospective financial information. Nature of documentation which is prepared by the entity to support the management assumption. What are the statistical and mathematical and computer assisted techniques used by the company in preparing this information? Method used to develop and apply the assumption, and accuracy of information prepared in prior period and the reason for any significant variation. So if you see before, as an examination procedure, you should go through the following things: that whether the client has proper internal control system, whether they have a proper MIS system, on what basis they are preparing the financial statements. In past, whether the financial information which they have prepared, they were matching with their projections or not. And if there is variation, why there has been variation, and how the variation explanation has been given by the management. So reliance to be placed on the financial information. The auditor should consider the extent to which the reliance on the entity's historical financial is justified. The auditor should require knowledge of the entity's historical financial information to assess whether the prospective information has been prepared on the basis consistent with the historical financial information. So if there are, you need to have basis, you will be having some basis of the historical data or the historical financial information. You can place reliance as an auditor on the historical financial information. If you see, you need to, if you are as an auditor, if you are giving the say project prospective information for say next 5 years, then you see the trend, historical trend of last 5 years. That what the there was the what was the historical trend, whether sales has been increased by say 5%, 10%, whether the prospective financial information are based on same aspect. And if they are not prepared on same aspect, then what are the assumptions or the new assumptions which the company is taking into consideration? So historical financial information should be used by the examiner or by the auditor while doing this. And if the audit or review report of the prior period historical financial information is not a clean report, or if it is a qualified report, then the auditor should consider the qualification and should report such facts and effect of the same in their examination report. It might happen that certain accounting policies or certain provisions would have not been done by the company, and the company had been following the accounting policy for which no provision was done. So while preparing the prospective financial information, the company needs to give effect of all these things. Otherwise, it will not be in line with the requirement of this SAE. So what are the timing and extent of the audit procedures which auditor should consider? So again, the auditor should obtain the knowledge which he has acquired during any previous engagements. Sources of information assumptions considered by the management. It can be internal source or external source. So what are the internal sources of assumption? Internal sources are that the MIS report which are prepared by the management, their day-to-day workings which they are preparing, all that are considered as the internal sources. And external sources are the sources that is the industry specific analysis done by the government, by the company, that are the external sources. So all that information are to be compiled while putting the information and assumptions, and the management needs to consider all these things as a basis of their assumption. Now, whether all significant implication of the assumption have been taken into consider. So if we are taking some assumption that our salaries will not increase for next 2 years, then there should be supporting related to this, that why it will not increase, whether there is any rate contract which has been entered by the company with the employees. And so it should be supported by the various, whatever assumptions are taken, it should be supported by the other considerations also. Then there may be certain areas which are particularly sensitive to variation, and we need to disclose the material effect on the results in the prospective financial statement. So it might happen that the company is having a good amount of debt, and presently they are having carrying a debt at this say rate of say 6%, and it is a material item. So we need to give a sensitive information that if it increases by say 10%, what will be the financial implication in the prospective financial information? Or either way, if it decreases, then what will be the impact on the financial information? The auditors will also consider the stability of the entity's business. So stability can be established by the way from the information, external sources or from the internal sources. And whether any factors are that which would, by which there will be a likelihood of misstatement. So all these things needs to be considered. So we should also consider that what are the intended use of the prospective financial statement. So already discussed that intended use it may be given to the bankers. It may be used for the internal costing purpose. It can be used as a source in the prospectus. So what are the use of the prospective financial information should be mentioned in our report. The completeness of the significant management assumption, management acceptance of its responsibility, and the management responsible for identification of uncontrollable factors, outstanding litigation, commitment, or other material factors. So this is important. If you see that at present, if you are preparing certain project report or prospective financial information, and if there are certain contingent liability, and if it is likely that in the next year the contingent liability there will be a situation that the case might not come in our favor or audit, then the effect of the same needs to be given in the prospective financial information also. And this all is the responsibility of the management. So presentation and disclosures. What should be presented in our report? It should be presented that the prospective financial information is informative and we are not vouching for its accuracy. The accounting policies should be clearly disclosed in the notes. The assumptions should be adequately disclosed in the notes, and it needs to be clear whether it represents the best estimate assumption or are hypothetical. So clear demarcation should be made while we are noting the assumption. If the assumptions are based on the proper documentation, then it will be a best estimate assumption. And if they are not, they are just on the based of the historical trend or some other factors, then it will be a hypothetical assumption. The date on which the information was prepared should be disclosed. In case of assumption, subject to high degree of uncertainty, the nature of uncertainty and the resulting sensitivity needs to be disclosed. So there might be certain factors. If say some wage settlement, if it is going on, you never know that wage settlement will be at 15%, 25%, or 13%. So that is an uncertainty in the assumption. So you need to disclose in your prospective financial information that there is an uncertainty related to the wage settlement. And if the wages are settled at 15%, then this will be the impact. If it is settled at 25%, this will be the impact. So it should be clearly demonstrated and disclosed in your report. And what are the change in accounting policy of the entity and its effect, if any, on the financial information. So all this needs to be disclosed. Now, as an auditor, what we should document? We should document the source of information. From which sources the assumption has been derived by the management. That source needs to be documented. Basis of forecast needs to be documented. And the assumptions made in arriving the forecast. This has to be documented. In case of hypothetical assumptions, evidence supporting the evidence should be documented. Management representation for its intended use and distribution. Completeness of material assumptions. Management acceptance of its responsibility for the information. So take a MRL, MRL should clearly demonstrate the responsibility of the management, our responsibility, it should be clearly demonstrated in there. Audit plan, its nature, timing, and extent of the examination procedures will be documented. And if the auditor expresses modified opinion or withdraws from the engagement, the reason forming the basis of such decision should be documented properly. Now, report drafting. What should be the information which should be there in our examination report? So there should be a title, then whom we are addressing, then the indication that the information is there is a prospective financial information. A suitable remark should be that the reference should be there for the standard of auditing, which is applicable, that is SA 3400. Statement that the management is responsible for its preparation and the underlying assumptions which are taken by the management, a note should be separately given for the same. When applicable, a reference to the purpose and the restricted distribution of the prospective financial information should be given. So if suppose the client is asking for the prospective financial information to be submitted to some client, then our report, examination reports will clearly mention that it is restricted for the distribution to this particular client only. It should not be used for the general purpose. And this is very important because otherwise the client will share this information to every bankers and other one, and we will be responsible for the same. So please put a remark in your examination report of this restricted use. Statement that the examination procedures included examination on a test basis of evidence supporting the assumption, amount, and other disclosures in the forecast and projections. So always clearly mention that we have carried out the examination on test basis, and the supporting evidence has also been tested on test basis. We need to give also a negative assurance that the assumptions provided are reasonable for the prospective financial information. So negative assurance is that if we find that all thing is proper, if something is not proper, then only we need to give a qualification. Otherwise, we need to say that we had not found something which was not in compliance with that. That is a negative assurance. We need to opine whether the information is properly prepared on the basis of assumption and is presented in accordance with the relevant financial reporting framework. So that is the final opinion which needs to be given by us. We need to give the appropriate caveats concerning the achievement of the results indicated by the prospective financial information. Date of the report should be clearly mentioned, place of signature and signature. Now, sometimes we might need to give a modified opinion. So sometimes the presentation and the disclosure of the prospective financial information is not adequate. So the data which are provided by the management, we do not agree with them, or they are unreasonable. So in that case, as an examiner, we need to give a qualified or an adverse opinion. Or if required, we can also withdraw from the engagement. So if as an examination is also affected by the conditions that preclude application of one or more procedures necessary in the circumstances. So if you see that certain assumptions are given, but they do not give the proper supporting or proper documentation for that assumption, and we are deprived from the process which we need to carry as an examiner, in that case, we should withdraw from the engagement or disclaim, put a disclaimer or describe this scope limitation in the report of the prospective financial information. So this is the thing. We have completed SA 3400 related to the prospective financial information. Any questions, or we can take the same at the end of the session. So I will be little quick now. SAE 3420. So it is related to the assurance engagement to report on the compilation of pro forma financial information included in a prospectus. So specifically, they have said that it is related, or it is to be applied only related to the pro forma financial information which is included in prospectus. So prospectus is a thing when we give it to for the SEBI requirement or SEBI listing. Now, what are pro forma financial information? So friends, sometimes it happens that when we are compiling the information for the SEBI listing or that, it might happen that the company may be going for the further acquisition of some companies, or they might be in a process to disinvest some of its present operations. But as on date, nothing has happened, but they might be doing it, or they have already done. Suppose in a restated financial information, we need to compile it for the last 3 years. Now, in the current year, only the company has acquired one company, and that has become a subsidiary of the company. So in that case, we need to restate, or we need to prepare a pro forma financial information for all the 3 periods, as if from the day one, the company has acquired this company, and what will be the impact on the restated financial information which are given in the prospectus. So it mainly applies to any acquisitions made by the company or any disinvestment which are done by the company. So this essay deals with the reasonable assurance engagement undertaken by a practitioner to report on the responsible parties' compilation of pro forma financial information to be included in prospectus. This essay applies where such reporting is required by SEBI or the other regulatory law. This reporting is generally accepted practice in such jurisdictions. For India, we have a SEBI for which this law is required, that the company needs to incorporate the pro forma financial information of all the companies or for all the entities which they have acquired during the year, and what will be the possible impact of the same for the last 3 years in the financial informations. We say it as a DRHP or RHP, which is submitted to the SEBI. So it should be clearly mentioned that the practitioner has no responsibility to compile the pro forma financial information of the entity. Such responsibility rests with the responsible party, that is the company or management. What is our responsibility? Our responsibility is to report whether the pro forma financial information has been compiled in all material respect by the responsible party on the basis of applicable criteria. This essay does not deal with the non-assurance engagement in which the practitioner is engaged by the entity to compile its historical financial statement. See, if you see, it might happen that you have acquired some company and that company was following IGAAP. Now, while going for an IPO, it is mandatory that your financials are restated as per Ind AS. Now, you should see that the all 3 years financial statement of that company which has now been acquired by you should be in a Ind AS or IFRS format. So it is not as an auditor we have to see, but as a management they have to compile that yes, they are following the same policies in which the compilation has been done by the company. And in prospective financial information or in prospectus, there are a lot of things. Suppose there are historical statement which needs to be given for last 7 or 5 years. So if you are engaged to compile the same, then this essay does not deal with this because it is just a compilation of the historical financial information. So what is the prospectus? The purpose of pro forma financial information included in a prospectus is to solely illustrate the impact of the significant event or transaction on unadjusted financial information. So as a standalone basis, when you have not acquired that company, your financials are considered as an unadjusted financial information. Once you have taken that company, you restate for last 3 years, that will become your adjusted financial information. And whatever adjustments you are made will be considered as adjustments which are given to the pro forma financial information. So thus, a pro forma financial information do not represent the entity's financial position, performance, or cash flow. So actual financial position for last 3 years or for the current year of the company will be different. When you are compiling this unadjusted financial information, you are including it in a prospectus, it will be different because you are incorporating such companies which you have acquired in the current year, but you need to give effect in last 3 years which you are presenting in your prospectus. Now, compilation of pro forma financial information. So at the time of compilation, we need to identify the source of unadjusted financial information. So source can be the historical balance sheet, the data which can be available from the MCA website or from the external sources. Making pro forma adjustment to the unadjusted financial information, and it should be presented resulting into a pro forma financial information with accompanying disclosure. So whatever adjustments are given to the unadjusted financial information, it should be mentioned that these are the adjustments which are done and proper disclosure should be there in our report. Now, nature of engagement. So it is a reasonable assurance engagement. We need to report on the compilation of the pro forma financial information and to obtain sufficient appropriate evidence. So earlier we have seen that in prospective financial information, it was a moderate level of assurance. In this, we need to give a reasonable assurance and we need to comment that whether proper evidences were obtained so as to relate the pro forma adjustment given in the in those criteria. The resulting pro forma column reflects the proper application of those adjustments to the unadjusted financial information. So pro forma, it will be prepared in such a manner. First, there will be a column that this is unadjusted financial information. Then there will be a second column in which we will be giving that these are the pro forma adjustments. And at the end, there will be a third column that after giving the pro forma adjustment, these are the resulting figures after giving the pro forma adjustment. So they are called as adjusted financial information. Now, it does not involve the practitioner updating or issuing any report or opinion. Now, once we have given the report and subsequently something comes to you, then as a practitioner, you are not responsible for changing the same or for performing an additional audit or review of that financial information. So what are the objectives which need to be achieved? So the objectives of the practitioner are to obtain a reasonable assurance about whether the pro forma financial information has been compiled in all material respect by the responsible party, that is the management, on the basis of applicable criteria. So what are the applicable criteria? Criteria may be the accounting standard, if we take the prospectus, if we take the example of prospectus. And as already discussed, if the same accounting policies are not followed by both the company which we have acquired, then we, as a practitioner, we need to provide an assurance that yes, the policy are aligned and whatever effects are to be given to the same has been given in our examination in our report. So certain important definitions. First is pro forma adjustments. So what are the pro forma adjustment to the unadjusted financial information? It includes the unadjusted financial information that illustrates the impact of significant event or transaction as if that event has occurred or undertaken at an earlier date. So I have given an example that if the company has acquired some company, say in 2022, in prospectus, they need to give information of 3 years, last 3 years. So the company needs to provide the adjusted financial information incorporating the financials of the company which they have acquired in the current year as if that it was acquired since the earlier date of the financials which are presented in the prospectus. Adjustment to the unadjusted financial information that are necessary for the pro forma financial information to be compiled on the basis consistent with the applicable financial reporting framework. So again, an example was given that the company which had acquired was following IGAAP. Now I am following Ind AS. Then first I have to convert that IGAAP into Ind AS, and then after I have to provide the appropriate adjustment. So common accounting policies has to be followed. If they are following, if they are not providing for the provision of say gratuity, then when we are incorporating in our financials, we need to give effect following the AS 15 or say Ind AS 19. Pro forma adjustment include the relevant financial information of a business that has been or is to be acquired, or a business that has been or is to be divested, to the extent such information is used in compiling the pro forma financial information. So any acquisition or divestment which are made by the company, divestiture should be included or should be excluded. Now, what are pro forma financial information? Financial information shown together with the adjustment to illustrate the impact of the event as if the event has occurred from the earlier date. Unadjusted financial information are the historical financial information which are there with the company before making any adjustment to the pro forma financial information. Now, what are the applicable criteria? This is important because under what applicable criteria you are doing the pro forma adjustments, that is very important. So the criteria used by the responsible party while compiling the pro forma financial information are considered as applicable criteria. It can be an accounting policy, it can be a IGAAP, it can be Ind AS. So these are the applicable criteria under which the pro forma financial information will be prepared. Again, once we are ready to accept the engagement, at the time of accepting the engagement, we should determine that the practitioner, that is the auditor, has the capabilities and competence to perform the engagement, whether the applicable criteria are suitable, and that is unlikely that the pro forma financial information will be misleading. It needs to be determined that the practitioner will be likely to be expressed in the opinion so describe the relevant law and regulation. So whether as an auditor, I will be able to express an opinion which will be in line with the relevant law and regulation. So all these factors need to be considered. whether the source from which the unadjusted information has flown or any acquiry or this divestiture has been extracted, or whether they are audited, reviewed, or whether any modified report has been given. In such cases, as an examiner or as an auditor, we need to see whether any adjustments are likely to be given in our report. See, if you are incorporating certain companies and if the auditor of that company has issued a modified report, that certain accounting policy or certain provision has not been made by that company. So while compiling the information or while providing the pro forma adjustment, you need to provide the provisions which were not provided earlier by the debt company. You obtain the agreement of the responsible party that it acknowledges and understands its responsibility. And the responsibility includes that there is adequately disclosing and describing the applicable criteria to be intended user if they are not publicly available, and in compiling the pro forma financial information on the basis of applicable criteria. So all this lies with the you in your acceptance letter. You write these things, that what are the responsibilities which are there on the management. It also needs to be providing the practitioner with access to all the information. So make it very clear while signing the engagement letter that we will require access to all the information, whatever business combination has been done, whatever agreements which you have entered, and all this information should be accessible to us at any time. We should also mention that at any time we will be asking for the additional information and the management will be responsible for giving those informations. We should also write that if any advice is taken from outsider by the advisors by at the time of doing these acquisitions, then we can also ask to that advisor to give a proper report to us. So valuation reports, all that can be taken from that advisors also. So I'll write all this thing in your acceptance letter. So at the later stage, there are no ambiguity that we will not be, that the management will not be giving you all this thing, and you will be in a dilemma whether you will be able to give a clean report or not. So now planning for the engagement, how to plan or how to do the engagement procedures. So at that time, first of all, we need to assess the sustainability of the applicable criteria. So what are the applicable criteria under which we are compiling the things and we are doing the things? Applicable criteria already discussed that it can be the present accounting standard under which the compilation has to be done. It has to be done as per the SEBI criteria of presenting the pro forma financial statement. Those are the applicable criteria. Always see the materiality level. Always decide the materiality level of the effects which will be there on the financial statement due to the pro forma adjustments. We need to obtain the understanding how the responsible party has compiled the information and what are the other engagement circumstances. We need to obtain the evidence of the appropriateness of the source from which the unadjusted financial information has been extracted. And we need to have the source of the evidence of the pro forma adjustments which are made. Again, if some modified report or emphasis of matter which is given in the pro forma financial statement, then how it should be there in our report, how to incorporate them in our report, it should be same. And as a practitioner, we should consider the possible effect of the same on our report. Sometimes when the source from which the unadjusted financial information has been extracted is not appropriate, and the same shall, so at that time it should be discussed with the management that how to resolve, because the source from which the information has came is not real, not reliable or not appropriate. So it can be discussed how the responsible party will resolve the matter, what are the disagreements, and what are the further actions to be taken. So further action can be that we can go for the legal advice, we can withdraw from the management, withdraw from the engagement, we can issue a disclaimer, we can issue a qualified report. These are the further actions. We should obtain the evidence about the calculations with the pro forma financial information and evaluate the presentation of the pro forma financial information. So all this thing needs to be considered while planning the engagement of the pro forma financial information. As a practitioner, we should determine what are the pro forma adjustments. See, certain adjustment may be directly attributable to the event or transaction. There are three types of thing. Certain adjustment will be directly attributable, certain will be based on the factual supported documentation, and others will be based on the accounting policies which are followed by the company. So if we say directly attributable means, suppose if a company, they have taken a decision that we will acquire another company, and after acquisition, we will close certain operations. So in that, whether any adjustments needs to be given in a pro forma financial statement, then the answer will be no, because that event is not directly attributable as on the date of entering into that transaction. Company may close down the operation, may not close down the operations, but it is not a directly attributable event, and no adjustments are required for the same. Factually supported are the various contract, various internal documentation, various valuation reports which are there on the company's thing, various board decisions which they have taken, based on which certain pro forma adjustments needs to be taken. These are the factually supported adjustments which are to be given. Another adjustment are related to the common accounting policies needs to be followed by both the company which has been acquired and the company which has been by the acquirer. So these are the major pro forma adjustment which will be there in the engagement procedure. So the practitioner should read the other information included in the prospectus, and if it's identify any material inconsistency, then it should be reported. So it might happen that in prospectus, lot of information is given. Not only the pro forma adjustment, but related to it also prospective informations are given in the prospectus. So as an examiner, we need to have this, we need to go through the other informations which are there in the prospectus based on our pro forma adjustments. And if there is any inconsistency, then we should bring it to the knowledge of the responsible party, and we should be aware that there is no material misstatement. And if there is any material misstatement, we need to qualify our report. Now, basis of opinion. Opinion can be modified opinion or a clean report, that is an unmodified opinion. So pro forma financial statement has been compiled in all material respect. If all things are okay and the pro forma financial statement, all documentation are given or assumptions are given, then it will be an unmodified opinion. However, in modified opinion, practitioners have discussed the matter with the responsible party, and if the responsible party does not agree to make the necessary changes, the practitioners can take a legal advice or withdraw from the engagement. So while drafting the report, if you come out with some things which are, suppose the company has not followed the accounting policies which are in line with the accounting policy of the main company, so you need to give a modified opinion, and if the company does not agree, then you can consider the legal advice or you may withdraw from the engagement. So the last audit SAE, that is assurance report on controls at a service organization. This is this SAE has to be followed in a circumstances or in a cases where, suppose there is a company A. Now company, what does the company A says, that they have outsourced their entire payroll function to say company B. That is a service organization. Company B is a service organization. Now, what does the auditor of company A says, that you have outsourced this payroll function to the other company or service organization. Let me have assurance that the controls which are there are properly implemented. Or it might happen that company is following certain say softwares for processing its loan and other things. So as an auditor or as a company, I need an assurance, that is assurance from a service auditor, that yes, the software or the things which are performing are in line with the procedure or controls which the company wants. So in that case, if we are appointed as a practitioner or if we are appointed as an auditor, we need to give an assurance report under SA 3402. So the scope is, it deals with the assurance engagement undertaken by service auditor to provide a report for use by user entity. User entity is company A and their auditors on the controls at the service organization. So service organization is company B, to whom the company A, that is a user entity, has outsourced its payroll activity. So what does the service organization has to provide? They need to provide a service to user entities that is likely to be relevant for the user entity internal control as it relates to financial reporting. So take an example that company A has given the payroll activities to company B. So company B is a service organization. Company A is a user entity. User entity, that is company A, comes to me, service auditor, and they say that you give us a report that the controls which are established by the service organization are proper or not. At that time, while giving the report, as an I will be a service auditor, I need to follow SA 3402. So this SA deals only with the assertion-based engagement that convey reasonable assurance, with the assurance conclusion worded directly in the terms of subject matter and the criteria. So it deals with only assurance-based engagements. Suppose if the user entity comes to you and they say us that just list down the procedures, what are the non-compliance which are there in the service organization, then this is a direct reporting and it will not be covered under SA 3400. But yes, when the user entity comes to you and as a service auditor, they ask a reasonable assurance that whether all the controls are properly implemented by the service organization or not. In that case, you are giving an assurance, and that report might be used by the user entity for circulation to others or to their auditors also. So in a way, you are giving an assurance based on the assertion. And in that case, this SA will be covered. SA will be covered. So what is the objective? The objective is to obtain reasonable assurance about whether in all material respect, based on suitable criteria, the service organization, that is company B, description of its system fairly represents the system as designed and implemented throughout the specified period or specified date. So take an example of this. We move forward with the example of this payroll. If we have outsourced this payroll activity, firstly, a user entity and as a service organization, we would have entered into some agreement that we, as a user entity, will provide the data of, say, employee, their salary, and that should be vouched by the user entity that yes, we are providing the correct data. We are providing the correct numbers of employee. We are providing the correct salary of that employee. Now, what has to be implemented from the side of the service organization? They need to see that whether all the salaries are properly credited to the account of the respective employees, whether properly TDS is deducted or not. And if the TDS is not deducted, then there will be a financial penalty on the company. So it is important for the user organization that the procedures or the controls which are implemented by the service organization, that is whether proper TDS is deducted, proper salary is given to the respective employees, are followed or not. And for that, they come to us as a service auditor that you give an assurance that yes, that service entity is following all this procedure, or the system which they are following are fairly designed and implemented so as to give a specified result. So there may be a report of two types. In type 1 report, as a service auditor, I need to report on the description and the design of control at a service organization. So in type 1 report, as a service auditor, I only say that yes, the controls are there, and these are the controls, and what are the risks and how that risk has been mitigated by the service organization. And that report should comprise of the service organization description, a written assertion that in all material respect and based on the suitable criteria, the service organization systems are designed and implemented as on the specified date. And the control objectives. So control objectives are the objectives or the controls which are placed to, that is the identification of risk and how that risks are mitigated by establishing the control objective. So that is known as a control objective. So how they are mitigated. So the design of the system is such that the following misstatement does not happen as on a specified date. So as an auditor, I need to give a reasonable assurance. In type 2 report, I also need to give as an auditor or as a service auditor, I also need to give additional comfort or additional assurance that the service organization description of its system are operated effectively throughout the specified period. In type 1 report, I am not saying the operating effectiveness. In type 2 report, I am also commenting on the operating effectiveness of that controls. Now again, before acceptance of the engagement, the service auditor should determine whether it has the proper capabilities and competence to perform the engagement. The criteria to be applied by the service organization to prepare the description of its system, the scope of engagement, and there should not be such description that the scope is limited, and it is unlikely to be useful for the user entity. And we need to obtain the agreement of the service organization that it acknowledges and understands its responsibility. So responsibility statement should be taken from the user entity or from the service organization as well. Now assessing each of the criteria. So the service auditor shall assess whether the service organization has used suitable criteria in preparing the description of a system, in evaluating whether the control are suitably designed, and in case of type 2 entity or 2 report, in evaluating whether the control are operating effectively or not. So firstly, as an auditor, we need to identify that what are the controls which are need to be established, what are the risk areas, how the controls are mitigating that risk areas, and whether there are any chances of material misstatement or not. So the description present how the service organization system was designed and implemented includes the type of services provided. So it may be a payroll service, it may be a cash outsourcing. In some of the companies, I have seen that they do not have any cash department. They outsource the cash, they give a check to particular person or particular entity, and they will manage the full cash transactions. So in that case, we need to take this report because that cash transactions will not be incorporated in the books of the company. So the procedures which are followed, the procedures may be based on the technology, or there may be a manual system. We need to also see whether the related records and supporting information is appropriate, accounting records are available, and whether the specific accounts and information is available to us. Further, the service auditor should also assess how the service organization system deal with the significant event and conditions other than the transactions, how the process to prepare the report and other information for the user entity, what are the specified controls, complementary user entity control contemplated in a design of the controls. So what are complementary user entity control? So in our example, I have said that the data related to the employee will be given by the user entity. So it is a complementary user entity control because the data, to provide the data, is the responsibility of the user entity of the employee. So that responsibility does not cast on the service organization, but it is the responsibility of the user entity to give a complete data of employee. So if suppose the user entity have say 100 employees and they are giving data of only 80 employees, then the service organization is not responsible for any misstatement. The user entity will be responsible for that misstatement. Again, other aspect of the service organization, such as the control environment, risk assessment process, information system which is used, what is the communication process, what are the control and monitoring activities, all this needs to be considered while assessing the criteria. Further, in case of type 2 report, whether the description includes the relevant details of changes in the service organization system during the period covered. So in type 1 report, we comment as on date, whether the controls are there or not. In type 2 report, we check the same throughout the year, and also we check the operating effectiveness of that controls. Now the service auditor shall determine if the criteria encompass at a minimum whether the control were consistently applied as designed throughout the specified period. This includes whether there are manual controls were applied by the individuals who have appropriate competency and authority. So sometimes it might happen that there are manual controls which are established by the service organization. Then as an auditor, we should have to make proper inquiries with the appropriate individuals and assess whether they are appropriately competent and they have the appropriate authority to carry out the manual controls or not. So make proper inquiries uh, with the head of the particular department, and then we need to assess whether they are competent and whether they have proper authority to take the decision for the same or not. Other aspect to be considered while doing this, while compiling the information as per this essay, that is materiality. We need to understand the service organization system. That is, what are the controls established, what are the information technology systems incorporated in the control system, what are the manual controls are there in the service organization. Whole understandings need to be taken. This can be taken in a form of incorporated in the engagement letter itself. We need to obtain the evidence regarding the description. So what is the description? What are the requirement which are need to be, or which on which we need to give a assurance report. So in a payroll, if they are saying that you give a assurance report on whether proper TDS has been deducted by the service organization or not for all the employees, then that is the description for which we will be giving an assurance report. That yes, the systems are in place with the service organization, that the proper TDS is deducted of all the employees, and the system is built in such a way that any employee's TDS doesn't skip out of the system. So proper controls are there. We need to give assurance on that system. Obtaining evidence regarding the design of control. So how controls are designed, who are monitoring the controls, if there is any change in say TDS rate, whether the proper changes are made in the system, inbuilt system or not. So that is the evidence regarding the design of controls. We need to take that, whether if there are some changes in say rate of say employees, or if their say employee limit of salary has increased, then whether the system's design has changed or not. We need to obtain evidence regarding the operating effectiveness of control. So for that, we can have a sampling. We can take samples of which represent the proper population, and on that basis, we can give a report on operating effectiveness of the control. And if there are any deviation, we need to suitably modify our report, or if the deviations are not material, we can give in our report that yes, following were the deviations. There are, suppose there are 2 or 3 employees on which TDS was not deducted by the system. Then whether it was a system fault or it was a manual fault, you need to give the nature and cause of deviation. Obtain an understanding of the internal audit function. So whether the internal audit covers the area on which we need to give assurance. You can have access to the work of the internal auditor. You take their report and you can assess them. You can have an effect of the service auditor's assurance report. You take written representation, that is MRL. Other information which are needed to be included in our report should be suitably incorporated in our report. If any subsequent events occur after our report, then in a way we are not entitled to give a new report. And take proper documentation, which we have already discussed earlier, that what are the documents which are needed to be taken. So finally, when we will be issuing a assurance report, what should be the content? So a content can be, there will be a title, address, clearly identification, that what are the description on which the service auditor have to give a report. And if the descriptions are related to the complementary user entity, then a statement should be given by the service auditor that we have not evaluated this suitability of design or operating effectiveness of the complementary user control. And the control objective stated in the service organization description of its system can be achieved only if the user entity control are suitably designed along with the control at the service organization. So what does it say? There may be, while giving a report, I have said that certain data or certain information will be there from the user entity. Now we have been appointed as a service auditor for the service organization. So we should clearly mention in our report that the completeness or the data which are needed to be provided, employee data which are needed to be provided, are the complementary user entities control, and we have not vouched for the same, or we are not able to give the assurance for the same, because we have only seen or we have only done the control effectiveness of the service entity. Sometimes it may happen that the service entity has further subcontracted the things. So in that case, it will be considered as a sub-service organization. So there are certain procedures, if they are subcontracted by the service entity, we should clearly mention that these are the design and controls or the descriptions or policy or the procedures which are subcontracted. And we have not performed the control testing on that sub-service organization. The auditor should identify the criteria and parties specifying the control objectives. A statement should be there describing the taste of control are intended only for the user entity and their auditors who have a sufficient understanding to consider it, and it should not be used by others. And when assessing the risk of material misstatement, the user entity has considered all the things. Then it should be stated that the control objectives, whether or not identified by law or regulation, and the designing and implementing control to achieve the control objective are there in the system. It should be clearly mentioned that what are our auditor's responsibility? Auditor's responsibility is to express an opinion on the service organization description and the design of control related to the control objective. And if the auditor is issuing report of a type 2, then in addition to that, the auditor needs to also comment on the operating effectiveness of those controls. Statement should clearly indicate that the engagement was performed in accordance with SAE 3402. A summary of the service auditor procedure should be given. What are the statement of limitation of control should be given, and if there is a risk of projecting to future period, then it should be evaluated at the time of giving report on operating effectiveness of the control. The service auditor opinion expressed in positive form on whether in all material respect based on suitable criteria. Again, in type 2 report, what to be mentioned, we have already discussed that we need to say that yes, the description was fairly represented, the control objective have been fairly represented, and the control objective effectiveness, operating effectiveness has also been tested by the service auditor. Sorry. Now, if the service auditor concludes that the service organization description does not fairly represent in all material respect the system as designed and implemented. So as an auditor, if you see, you have outsourced your loan transaction, that whatever loan which we have given and the whatever recoveries has been made would be properly implemented in the system. And it is a system generated process, interest provision and all that. Now, while doing the engagement, you think that there are certain items which have skipped, then you need to modify your report that yes, the system does not fairly represent in all material aspect as the system was designed and implemented. There might be certain controls which needs to be changed on year basis or in between the year. So whether the company has changed its designs, its control or not, that has to be commented. And if the company is not changing with the design and the controls, then a suitable modified opinion should be given. Other communication responsibility. So now, while performing your engagement performance, if the service auditor becomes aware of any non-compliance with any law or regulation or fraud or uncorrected errors, then it should clearly say that yes, we have come out with this, and if the matter has not been so communicated to the service organization, and the service organization is not willing to do so, the auditors will take the appropriate action, such as obtaining the legal advice about the consequences. At least we should communicate with those charged with governance, communicating with the third party, that is the regulators, and modifying the service auditor's opinion. And we can also withdraw from the engagement if the things are not in line with that. So these are the 3 standards, SAE we call it, which are to be performed while taking the specific assignments, assurance engagements. So thank you. I will be ready for the questions, if any, and would also like to thank the WIRC for giving me this opportunity. Hello.
Hello, Mr. Pareen sir. So there are like 5 questions in the Q&A. I'll just read out one to you. So the first question is engagement letter mandatory for non-audit services like certification, representation services, etc.?
Yes, see, the certification is an assurance service. So we should take the engagement letter is mandatory for it, because for any assurance services, you should have the engagement letter implicating the responsibilities and the information which will be which we will like to take from them. So it will be mandatory.
Okay.
For the
so
assurance services, not for representation services. For certification services, it will be mandatory.
Okay, and for the representation services, no engagement letter.
But it will be better. See, it is not mandatory as per the standard, but it should be taken so as the clearly terms are demonstrated in the engagement letter.
Right, right. Okay, so the next question is, are SAE part of SAs or separate standards?
It is a part of it.
And the last question is, how many total SAEs are issued so far?
So 3 I have covered. All. Three.
Okay, okay. Thank you, sir. That's it, sir.
So thank you. Anushri, should I leave now?
So just a second, I'm just checking. I'll just get back in just a minute.
Pareen sir, questions चाहिए, sir?
No, I have seen the questions. I have answered them also.
Okay.
And one question is that any good reference material to keep. So I would suggest everyone to go through the essay per se, which are issued by the institute, because they are very well taken up, and also the reports, how the reports or the examples are given in the essay itself. So it will be better to go through that essay which are issued by the ICAI. Also, the implementation guides are given by institute on various essays.
Hi, sir, I just request you to please wait for 2 minutes. We are just awaiting Piyush Chandak sir to join in. Just 2 minutes.
Okay.
Yeah, thank you.
So I thought there will be questions, so I completed a little bit fast.
Yes, sir, I understand. So we have another question in the Q&A chat box. So the question is the Indian auditing standards in line with the international auditing standards?
See, there are some differences. And if you go through the essay which have been issued by ICAI, they have clearly mentioned what are the deviations which they have taken from the international auditing standards. So point-wise, they have taken what are the deviations there from the international auditing standards.
Okay, sir. Okay. And any good reference material to keep pertaining to the...
For that, I have answered that basically, if you go through the essays which have been issued by the institute, Mother Institute, you will get a proper examples how to draft the report, how to draft the modification report. So it will be better once you go through that only.
Okay.
Where standard, once you read this assurance standard 1 or 2 times, you will not be able to actually correlate the things. But once you go through the standards, you will be actually able to correlate the things in your practical way also.
Right. Next question is UDN required for reports issued under SAE?
Yes, yes. Because it is a certification assurance service, so it will be required. If you go through the FAQ on UDIN, they have said that any assurance service report will require the UDIN because you are giving an assurance. Then one question is that from Priyanka, what points to be keep in mind for MSME? So see, this is mainly essay has to be followed by the auditor. They do not say that if the company or the entity is MSME, then there are certain exemptions. So it has to be, it is a spirit of audit. Essays are spirit of audit. So it has to be applied in every case. So one more question is that bank insists on certified trial balance. Is SAE helpful in such cases? So see, whatever we have covered that was related to the prospect. This will be a provisional thing. You cannot certify the TB per se, but yes, you can certify the provisional financial statement. And you cannot write that it is a provisional financial statement. You have to give a review report. So it will not be covered under SAE, but a review, that is SA, I think 2400. A review report needs to be given that we have reviewed the financials. You cannot simply certify on the trial balance person.
Okay, sir. So on behalf of Piyush Chandak, sir, I would like to take this opportunity to give a hearty vote of thanks to you. So I am Shri Gupta on behalf of WIRC and its entire fraternity would take this opportunity to propose a very hearty vote of thanks to our today's speaker. So thank you so much for sparing your precious time for this webinar. You have been a great speaker today, sir, and thank you for highlighting on all the 3 topics of SAEs. It was an extreme pleasure and delight to have you today. My deep sense of thanks and appreciation also goes to all the participants who are live with us today and attended this webinar with great enthusiasm. So thank you for being with us today and have a wonderful day all. Thank you so much.
Thank you, Anushri. Thank you, WIRC. Thank you, Chairman. So I am leaving, Anushri.
Okay. Yes. Thank you.
Yes, thank you.
Okay, so we would now like to move on with our next session. Welcome, Sir Nayan Kothari. I would like to take this opportunity to give a brief introduction about our today's faculty. So CA Nayan Kothari is a postgraduate of Commerce from MS University of Baroda and a fellow member of Institute of Chartered Accountants of India. He has also completed post-qualification certificate courses of ICAI, that is the Forensic Auditing and Fraud Detection, and certificate course on concurrent of banks. He is a practicing chartered accountant based in Baroda since 2006. He is a partner of Manoj Vipin and Co Chartered Accountants. His areas of practice include internal and statutory audits of SMEs and corporate consultancy in the accountants. His areas of and fraud investigation and forensic auditing. He is also doing consulting in the areas of direct and indirect taxation and company law matters. He was a managing committee member of Baroda branch of WIRC of ICAI for 8 years and presently the past chairman of Baroda branch of WIRC of ICAI. He is the co-opted member of Research Committee of ICAI New Delhi for the year 21-22. He was co-opted member of the Banking, Insurance and Pension Committee, Editorial Committee and Exposure Draft Committee of WIRC of ICAI in the past. He has worked as lecturer at Faculty of Commerce of MSU Baroda and taught subjects like Financial Management and Taxation. He is also visiting Faculty of Law, MSU Baroda, and teaching taxation at PGDTP. He is the regular faculty at certificate course on concurrent bank branch of ICAI and has addressed more than 75 batches across the nation so far. He is also mentor to students pursuing their management studies with finance as their majors, where he imparts practical know-how and lessons for working in corporate office culture and dealing with practical case studies. Sir, I would like to hand over to you to take our today's session on compliance with auditing standards, a SME perspective. Over to you, sir.
Thank you, Madam, for the introduction, and thanks to WIRC for giving all of us the opportunity to share our views and be here. So today, is it audible, Anushri, or should I use the microphone?
Yes, sir. Yes, sir. You're audible.
Thanks.
Audible, yes.
So, the heading of the chapter which I had taken up, or I was to take, that's reads like the MSME perspective with respect to the standard of auditing. The second line was somewhat missed out. That's the specific emphasis on the documentation, because the MSME in particular has got a typical features of, may it be the working pattern, may it be the availability of the records, may it be the existence of the control or not at all the controls, only the owner is sitting and managing the entire show, and various. As Pareen earlier mentioned, that whether it is MSME, a listed entity or otherwise, me as an auditor is not exempted from any compliance with respect to standards on auditing, because I'm going to give any type of the assurance for that whatever guidelines are given by the institute to us are required to be followed. So the major flow of the discussion which I had thought of is to take you through a little briefing about the peculiarities of the SME, MSME. Even that para is added in the asset bonded as well. I've taken certain glimpses from there also. Then few aspects how one should be dealing with the same, and particular list of documentation, more or less covered in each and every standard I tried to narrate and take up over here, so that we would be at least able to gain an understanding what bare minimum documentation I must have at the end of the assignment for any query reply, for any peer review, or for any quality control requirement or otherwise, right? But what the beginning thing, minimum thing, and the end. And particularly regarding MSM repeating, there could be the different type of the problems with respect to their controls, and compliance level and documenting. Me as an auditor shall have to comply with each and everything required by the SAs. So that's the briefing, that's the base with which I want to take up the particular subject. So if I talk about the MSME, there is the major point is the concentration of the ownership and management is with the person, few persons or the family member. Transactions are not complicated. There are simple transaction. There are no much line of the control. Just a minute. Then there would be few level of the management, the minimum, and few person. But sometimes even in this kind of the structure, they might be doing wonderfully good. Also, a matter of further few points from the certain government documents with respect to MSME. As per the World Bank, SME shall play a major role in most economies, particularly in the developing countries like us. Formal MSME contribution up to 60% of the total employment, 40% of the national GDP in certain. Talk about our country in particular. The goal of the new government is to make 5 trillion economy by the next year, probably 2024, with the typical punchline which the government has. The revised definition. Earlier, the MSME used to have the definition with respect to the investment, then the hybrid definition had come up, and the definition had come for the turnover, and the latest one, the criteria for classification of the MSME, which came in the year 2020, that is the hybrid one, which talks about investment and or the term, right? So this is what are the three classification as per the definition given by the department of the government. Standards on auditing. In particular, as I have said, they are the guide to the auditor. As the earlier faculty very nicely mentioned, they are the spirit of the auditing. They will help us to plan the audit. It shall help us to do the audit. Later on, it shall help for checking the various aspects related to audit. So let's start acting based on the assets available. And one thing to be done constantly, parallelly is documenting, because that's the probably only thing which shall come to the rescue of the auditor if in the situation is being asked for to prove whether the work was done with proper diligence and care or not. Documentation shall serve as the basis of opinion which the auditor might have. Documentation shall be reviewed by the peer reviewer. SQC requires the documentation to be there, and the list of the documentation, if we talk about, that is the end, right? And that entire thing, whatever we can see right now on the screen, is to be done keeping in mind the essays. They will help also, and under the guidance or guidelines given in the essay, we will be in a position to control our audit in a more efficient and quality audit. These are the list of essays. I don't know earlier faculty did cover up this or not, but some of the friends were asking under which category how many essays are issued so far. So this slide shall give you an idea of at least the numbers, because now the numbers are in sync with the international numbering of 200, 300, or even the 4-digit. So sometimes we do not keep a track that in the serial number how many essays would be there. So just for that reason, I had tried to include this. Further, few more things, regulatory requirement, because whenever something has been asked to be complied with, immediate question comes is, who asked you to come? Or what shall be the consequences if I do not comply? This too typical psychological issue also comes. So I have tried to put here few of the points which are the requirement as to the compliance with respect to the essays, statutory audit report, tax audit report. Whenever I am issuing, this has to be done in line with as per the guidelines given in the essays. Any action suit under the Companies Act, again, the documentation shall be very, very important at the audit out with the proper diligence and care, and the auditor is innocent, audit firm is innocent on the charges put on. Quality assurance of the audit to ensure that audit complies with the professional standards, which are the another requirement given in the provisions of SQC1. Again, the documentation is something which should be very, very important. And of course, the listed entities audit, peer review certificate, audit quality review board, QRB, FRRB, to comply with this all regulation, legal compliances, the documentation is mandatory. Further, compliance with the standards. Few more thoughts or more points with respect to the same. It in any way going to be bad. Compliance with the standards always in every manner going to be beneficial, not to the auditor, to the auditing firm, right? Compliance with the standards, timely completion of the assignment, serving the purpose of the guidance in the various situations, quality assurance of the assignment that would be required by the statutory framework, safeguarding the firms and auditors' interest. They represent generally accepted procedure of the audit if member does not disclose the departure therefrom. That particular point regarding the departure from the general requirement and what would be the consequences and requirement when I comply in the manner stated, when I comply, but I departed, but I disclosed. If I do not disclose, this is mentioning that it might result into initiation of discipline. Compliance and departure, both the points shall be largely covered up over here. These are one of the few of the incidences that took place in the history, and auditing procedures were at various point of time were under the question. So that's the reason one need to, as an auditor, comply with the standards on auditing and keep it well documented. Further, historical viewpoint, if I have to take up that, why these standards are relevant. Stakeholder shall be relying on the work which is being done by the auditor, published the report of the auditor that is working in the interest of the stakeholders, governance, code of ethics to be followed in the true spirit, quality assurance, creditability, and wider acceptance of the such reports and documentation at the global level. Essays, they will enhance or ensure the enhancement of the quality in the engagement. The preface which is there into the all the standards together, it reads like this: while discharging the attached function, it is duty of the member of the ICA to ensure that standards are followed in the audit of the financial information covered by the auditor's report. If for any reason it has not been performed in accordance with the same, you should draw attention to the material departure, make the documentation of the same. But if you had departed, not disclosed, not documented as stated in the earlier slide, you would be subject to question. Further, some finds that are relevant in Chartered Accountants Act, Code of Ethics, peer review, quality review board, disciplinary mechanism, as a further deals with responsibility of the auditors and their approach to the specific areas, as a contains guides and the other explanatory material. consideration in the audits of the asset. Coming to the another part of the discussion. Okay. Difference between SME and a larger entity to be recognized, that's mainly about the scalability. And here the audit approach would change as per the circumstances. It would be very simpler in certain cases, but in certain cases, depending upon the circumstances, it might involve complexity. Requirement do not usually specify audit procedure, right? At the MSME level, where the record keeping or the control mechanism is poor itself, there, instead of the typical procedures and the requirement, I might have to use a lot of judgment as an professional skepticism and the professional judgment are the two basic points which the SA 200 has already mentioned in one of its paragraphs. So this is what it is which would be required, because the set procedures which I want to follow, I want to apply, shall be applicable where there are set procedures and other thing being followed at the entity level. But at the entity level, record keeping, concentration of the power, procedures, controls are designed in some different way than the formal organization. In those cases, there would be the auditor's judgment which shall play a major role. So that is one of the consideration one should keep in mind while planning, designing the audit plan for MSME. Application of the assets designed to be proportionate. Last line. Proportionate is not the modification of the requirement. Proportionate means depending upon circumstances, level of complexity, nature of auditing, applicability of certain things, the assays may or may not be applicable. Meaning thereby 100% assays may not be applicable, they shall be applicable in a proportionate manner. But as very clearly mentioned, applicability of these in the proportionate manner does not mean that you are compromising, modifying on any of the requirements, either compromising or modifying not any of the requirement of the assets, right? But depending upon the circumstances, in total, the standards may not be applicable, right? Through the requirement management, those who are charged in the working and governance of the entity, that would be very less, unlike the larger entities. If we compare and if we talk about the SA 315 or 330, which talks about the risk management control, those who are charged with the governance of the entity, that ECWG means for these cases. If we talk about the risk, then the formal risk assessment procedure may not be there because there may not be the controls. Because one person sitting on the cash box managing the entire cash of the entire showroom, and that is one of the family member. But when they want to expand the business at 10 places, he'll say, I have got 10 family members. But what after or beyond that? Then you will go to the procedures and methodologies like larger enterprise. But at the smaller entities, they do follow control mechanism. How did they mitigate the risk? By putting which control? That entire cash would be handled by the family member, assuming he would be having the utmost level of the authority, confidentiality, and no mismanagement of, in particular, the cash. So the risk management control would be different at the MSME. Absence of the formal risk assessment procedure would be there very clearly. Instead of test of controls, where I said there won't be much control. Instead, test of controls in my auditing procedure, I might have to go with test details, right? Based on sampling, based on any other method, but Instead, major focus on the controls, it shall come at the details level, entry level transaction. Estimates, there won't be estimate which will be enabling and opting the choice of the response to the assessed risk related party. Here, yes. But reliance would be more on what? Inspection of the records, documents may or may not reveal certain related parties. So auditor has to rely more on inquiry, inspection, observation, rather than merely scrutiny of the financial transaction. And sometimes I might go through the list of the creditors, I might go through the list of the debtors. If they are the individual name having some common family last names, I can ask and inquire and confirm myself, are they related, or otherwise there are certain entity with whom frequent business is going on, large volume, or you can design that beyond 10% of the purchase or 25% of the purchase is coming from one party, or my 20% or more sale is being made to one or two parties. Then I might ask, are they related? I will have to rely on inquiry. When did I generated that inquiry? Based on the observation of the records or the details are made available to me in whatever methodology in which completed, incompleted, tested, draw details or the data available with me. So this is how in the various aspects related to the auditing, few of them I had taken and displayed here in these bullets, I might have to pick up the different approach, because repeating one more time, my responsibility to comply with the standards on auditing are not at all to change when it is MSME or otherwise. Right? But accordingly, I would take care of these all things. Sir, kindly restrict to the questions which are related to the topic, because we really concentrate on the Q&A, and sometimes it might distract also. Anyway. Though the application material, money consideration are there, should be specific to the smaller entities. Other guidelines, that the form and focus for communication with those who are charged with the governance of entity as said, unlike the larger entity, form and focus, the composition of those who are charged with the governance of the entity would be very limited, maybe 1 or 2%. And in that particular set of people, those who are charged of the governance, my manner and method of communication would also change. I might have to discuss with them. You'll ask, sir, you give me something in writing like MRL. Oh, sir, you are doing audit since this many years. Is that, don't you rely what I've said? But I would require something to be based off my opinion. So I would be requesting him, probably explaining him my situation, and would convince, get them ready to give us the MRLs, right? Because that familiarity is always there with these MSME clients. Probably we and they would have grown together in last decade, or they would have been our very beginning or the initial clients. With the help of some family influence you would have got, and one day when you ask for certain formal formalities to be followed or specific, a very typical human nature, if you ask something in writing from them beyond balance sheet, they'll always feel why. But I have mandatory requirement to comply with my standards. I have to be very clear, convincing, requesting, and ensure by selecting a form of the communication and getting communication back in the manner that I am saved and the minimum compliance where required with all the requirements of the documentation is done with, right? So these are the few points I wanted to discuss, friends, with you, which are with respect to the MSME. We would have challenges to comply with respect to the same, and by doing one or other activity, I might require to comply with this documentation and every other requirement of the standards which are mentioned in the various cases. Compliance with all the assets required in case of the MSME, if applicable, if relevant, yes. Basic obligation, documentation, audit planning, audit evidence. There is no not applicable kind of a situation would But yes, there would be certain standards, may not applicable over there. How could it be? Like SA299, joint auditors, they even did not wanted a single auditor. Could you believe there could be a situation where it shall be joint auditor? No. Like service organization, the word which was also discussed into the earlier presentation, they themselves being a very small entity shall not be using anybody to process their payroll or something like that. They shall not be using or taking help of a service organization. In those situations, SA402 may not become applicable. If they do not have an inventory, they themselves are the service oriented entity, 501 may not become applicable. I've taken a little strange example over there. That inventory standard also might not become applicable. Yes, that MSME could be a pure fintech company, right? 600, 610, even 20, where they are to take help of an expert internal auditor, not applicable at this level, and they have not gone for a voluntary internal audit. So that particular standard shall not be applicable. Conditional requirement need to be applied if condition do not exist. That's the simple requirement of the. And at certain places, the earlier slide has narrated very nice word, proportionate compliance, right? And certain places, not applicability shall come when it is related to the standards on auditing, applicable at the auditing assignment being performed for an app, right? The very simple basic thing, any auditing seminar probably without reference of that preface to the standards on engagement or the basic overall objective of the audit shall remain not complete, right? What's the overall objective? To give in the opinion. What opinion? That the financial statement as a whole are giving true and fair view. When they said to be giving true and fair view, when they are free from the fraud and errors arising out of various other things. Secondly, to report on the financial statement and communicate the required assets are complied with. This is what is the overall objective of the audit. One more thing, standards on accounting Ind AS and FRF, financial reporting framework, responsibility management to be checked by auditor and comment and opine whether this FRF has been properly adopted, appropriate, any those who are charged with the governance have made this in that particular manner or not. And of course, all the standards of accounting in AS, GAAP, whatever we call it, shall have been properly applied for. In our auditor's report itself, we divided the responsibility of the management as well as responsibility of the auditor. Requirement in the 200 itself. Why I'm mentioning all this is we want to correlate all these small points related to or of the auditing, related to the MSME level, related to the documentation required. That's the reason I have taken up these all points with me in the discussion. Ethical requirement relating to the audit of the financial statements, that is, auditor shall comply with the relevant ethical requirement, including those pertaining to independence, relating to the financial statement, on the auditor's engagement, professional skepticism. One simple meaning about that is you need to be little alert, not only at the time of performing, but from the beginning planning stage. Plan and perform the audit with professional skepticism. Recognize that circumstances may exist that cause a financial statement to be materially misstated. आपको चौकन्ना रहना है. You need to be very careful in the given situation. Professional judgment, at the earlier point in one of the slide, I had elaborated this. Auditor shall exercise the professional judgment for at both the stage, planning and performance of the audit of the financial statement. Audit evidence, always two adjectives are prefixed to it: sufficient, appropriate. Efficiency talks about quantum, appropriateness talks about the relevance to the assertion which an auditor wants to make. So to obtain a reasonable assurance, auditor shall obtain sufficient create number the audit evidence to reduce the risk to what level? Acceptably low level. Thereby, it shall enable the auditor to draw a reasonable conclusion at on which auditor's opinion, clean or otherwise, shall be based on. Whether I want to give a modified opinion or a clean opinion, both has to be supported by sufficient appropriate audit evidence. It does not mean only when in case of the modifying the opinion, I need to have SAAE, sufficient appropriate audit evidence. No, when I have concluded that it is fairly presented, what are the evidence you have? And evidences are nothing but the subset of the larger documentation which the auditor might have done. So it begins with the documentation and a subset of that, certain audit evidences which are very relevant, important material to the opinion which the auditor has given with respect to financial statement. Earlier slide had already discussed this, that these standards on auditing are applicable everywhere. So the auditor shall comply with all these relevant essays in the audit. An essay is relevant to the audit when is in effect some of the essay which are now discarded after the insertion of the new of them. That's why this kind of the phrase is mentioned here, and the circumstances which are addressed by the essay, like joint auditor. If that circumstances exist and the standard is in force today, then the auditor needs to comply. That is what is the requirement of essay 200. Further consideration of specific point of related to smaller entity referred to an entity which typically possesses qualitative characteristic like this: concentration of ownership, management in a small number of individual, maybe a single individual, one or more of the following. That is, this is not an exhaustive list, may not display all of the characteristic, but it is the a few illustrative items. Straightforward or uncomplicated transaction might be there. One item's dealership is there and they are doing the sale of only one or two items, only one supplier. Simpler record keeping, few line of the business or few limited product within those business lines, few or no internal controls, few level of the management with the responsibility of broad range of control by themselves. He himself will see the cash, he himself will see next day whether those cash collection was deposited or not. He himself does the procurement and sometimes checks the receipt of the goods as well. So the different level of the controls might be interested within one or two people or one person only. Few personnel may having a wide range of duties. That's what I give examples related to. Consideration of specific to the smaller entity included in this essays have been developed primarily with the listed entity, keeping in mind some of the consideration, however, may be helpful in the smaller listed entity or not. So this is about few points more particularly covered in essay 200 with respect to regarding the smaller entities. Yeah. Further, I've included two case studies over here. If time permits, we will take it at the end. Otherwise, when this material is circulated through WIRC, one can go through this both case studies. Now, coming to the major point which I want to cover up. Yeah, you are more or less on the time. related to the, I explained the essays requirement, compliance, mandatory, the MSME perspective, the legal, and more particularly the MSME perspective, which has been given into essay 200 in per. Now, essay 230, which talks about the document and various points of the advantage they have mentioned here of those list of the documentation, right? What does it reads like? This team in planning and performing the audit. With what? As we are being taught in the beginning of the career, that starts with the appointment letter, acceptance letter, then preparing the audit plan and then collecting the documents. While collecting the document, I would see there external, internal, directly obtained through client, etc., etc., etc. Right? And they have got these all analysts benefits. They assist the team in planning, performing the audit. After the audit is done, there are supervisory requirements, there are quality assurance requirements. So it shall assist supervision, direction. They will serve as the audit evidence for planning, performing the essays, assist quality and review. It creates accountability of the auditor, person of the audit team who did this particular record of the matters of continuous significance, assist the external inspection, and that will be serving as evidence of basis for conclusion, re-achievement of overall objective. This is what is the larger objective perspective this particular standard on auditing with respect to the documentation had given. Further, in documentation, certain challenges where with respect to regular auditing practices which we do, and some of them would be related to MS. Significant observation without reference of the source document. Always need to have reference of source document where I am putting up the observation. Documents are not properly linked. Documents in terms of the quantity are unsatisfactory, or maybe planning and nature are also not properly well documented. No documentation done for verification of the key management estimates, lack of proper segregation and indexation of the working paper, lack of document to ensure firm adhere with the ethical standard which are laid down by the ICAI, documents prepared for certain areas only which you thought to be relevant material, or only those limited assertion need to give as a part of tax audit report being non-corporate entity. RO is also not applicable. So documents to those areas are also not being prepared. It should not have happened. Contingent liability requirement disclosure, they does not reconcile with the working papers. No backup or mismatches for the comments which you have given in the CARO is applicable at the certain MSME level. So these are the certain, I would say, challenges which had been observed, or at the MSME level in particular, the auditor also does not comply with the documentation requirement. May ignore, I'll not say it does not comply, but certain ignorances are there, which I tried to narrate and list down over here. Few critical components of the audit evidence. Documentation is any material that provides evidence of the work which has been performed by the auditor, enable himself to satisfy himself first, and second to the various level of the authorities. Appropriate document will not to be burdensome, part and parcel of the duty and remuneration which we get. Quality must be ensured, be appropriate, efficient, and effective. Experienced auditors test caution against the checklist mentality. What do I mean by that? I mentioned into the bracket, each assignment will have specific documentation. One common checklist shall be good, but it would serve purpose probably to 60 to 80% at the respective level. The remaining 30, 20, 10% part of the checklist would be unique, special with respect to the entity where I am doing the audit. Certain entity, one entire part of my standard checklist may not be applicable. Like I said, entity which does not have an inventory at all, major checklist with respect to the audit of inventory or reconciliation may not be applicable. So I need to have a caution regarding that checklist mentality. At an article trainee level, that shall be fine. But as an experienced auditor who ultimately is an engagement partner, signing deep financial statement and issuing the auditor's report, to keep this critical issue in mind as well. Importance of exercising the professional judgment, probably one or twice. Earlier I discussed why at the MSME level, the judgment of an auditor shall be of more relevance. Illustration of how documentation can be done in the efficient and timely manner are given in certain documents issued by the ICI. Even the reference of I had given into this presentation. For objective, to prepare the documentation that provide, of course, sufficient appropriate record of the basis to serve or be as the basis of auditor's report. Evidence that audit was not only carried out, planned, and performed in accordance with the essays and applicable L&R, legal and regulatory requirement. In one of the earlier slide, L&R was used. So if anybody had a question for the full form of that, that stands for applicable, legal, and regulatory requirement. Few definition, work paper that includes all document, agreement, written representation, which you have video, picture, transcript, correspondence, soft copy, hard copy, any documentation, record of the procedure performed, relevant audit evidence obtained, method, conclusion, right? Working paper or work paper, more or less used. Audit file containing all these documents may be a file or the folder stored on your digital media or the laptop, etc. Experienced auditor, an individual, internal or external to the firm, who has practical audit experience and reasonable assurance understanding of the audit procedures, essays, legal and regulatory requirement, knowledge of the business of the client, business environment, and of course, auditing and financial reporting issues which are relevant to the industry to which you are auditing belong. So I'll not be going into the greater elaboration of the definition, but yes, as we are taking up the documentation, so I thought that particular para of the standard should not be missed out. Friends, you know how the format of any standard should is there, bearing as a 200 or 1 or 2 like those standards. Every standard will have one objective. After objective, in every objective, there shall be reference of few words which are very typically to be interpreted, defined as per the requirement of that standard only. Now you know the objective, you know the meaning of the words. Then there will be procedure in the following paragraphs that this objective which has been mentioned in the beginning paragraph, in the objective, the word which has been used are been defined properly, how to achieve that. Then the standard shall have the various methods given into that, like audit evidence. They have mentioned what the audit evidence is, definition, why to obtain, etc., etc. Then the procedures given, right? So this is how there would be object, definition, certain procedures are given to comply with the essay, like a procedure to risk assess, right? Then there would be requirement of documentation mentioned into the separate paragraph in each one of the essays. And then there would be conclusion, etc. would be. this flow, more or less, I'm using the word more or less, you would observe in most standards of auditing. SI 200 is a little differently drafted, of course. So that's why I mentioned that if I talk about the documentation, they give the object, the definition, then they'll give you the procedure, then they'll give you what all to be documented, conclusion, and right. Coming back to the slide, how much to document to take care of your past, present, and future? How much to document? Documentation should be detailed enough to take care of your past, present, and future. It shall assist in planning, performing, record the matters of continuous significance, materiality, creating accountability, assist in future the external inspections, assist the supervision and direction in present, and of course the quality control review related act. So this is what is the requirement of documentation. When to document? Immediately. Timely manner. Timely manner. Documents prepared after the audit are less accurate. So let's do the documentation as we go. SQC 1 has also narrated very clearly the time limit, 60 days. Retention, 7 years. And for all this, Pareen also mentioned the same. They have issued implementation guide for various essays. Which implementation guide, particularly to essay 230, I have given 16 case studies, which you can refer by downloading from the ICI website. And it has an appendix containing illustrative working paper format as well. Due to the limitation of time, I have not included that here, but I had very categorically given you the points from where one can gather these documents. Friends, just because we all are attached to the ICI or I'm speaking from the ICI platform, no. But out of the wide reading or trying to go through the various international pages or the website, I'd share my experience that probably the only institute where I can get the maximum number of free downloadable material, even without giving the login credentials. Those portals which only give the institute data by one or other manner or the articles, they also require the login paragraphs. Like Quora will not allow you to read 5 answers per day. I was reading Harvard Business Review, if I'm not mistaken. They allow you to read only 1 article free per day, and various other number of example could be there. Our institute website probably gives everything free, freely downloadable, not only required you to be online and remain on the website to read all the time, right? So we should be very, very proud of that, know where the material lies, download it, and use it for our various auditing purpose. Like one of the book on internal audit checklist is one of the very fantastic document they have created. Ready checklists are given industry wise. Here this case studies and the format of the working paper you go through in this implementation guide, you'll certainly see that, oh, if it is readily available, even my junior or the assistant manager or maybe some of them, the lead auditor or maybe article training can prepare if such a ready formats are given. So friends, try reading and using this various material available, freely downloadable on our website. Very, very important aspect is departure. Relevant, compulsory, mandatory requirement stated in standards or the procedures given in the standards. Standard, as I said, objective, definition, method. Which method? To achieve the objective. But I did not take that route. The Google suggestion. Then I departed from the route, but ultimately for what reason? To reach at the object only. Okay. You departed from the relevant requirement. You will write down the reasons for the departure, whether the departure resulted into achieving the objective or not. So reason could be the regular methodology did not help me reach the objective. And since these circumstances well documented, I departed from that, and that departure helped me achieving that objective. So if in the exceptional circumstances, the auditor judges that judgment of the auditor friends, it is necessary to depart from the relevant procedure requirements given in essay, then the auditor shall document how, why these alternative audit procedure performed by him based on his judgment into the exceptional circumstances helped performed, achieve, aim that requirement and the reasons for the day. Right. So this is one very much important paragraph as to the document. Further matter arising after the date of auditor's report, you already issued the report and some exceptional circumstances comes, then you will perform or no additional reporting would be required, but the auditor shall document the following circumstances, new additional audit procedure if at all performed, conclusion, and when and whom the resulting changes to the audit documentation were made and report. So these are the two important things. One of the very important part is this departure from the requirements. Further documentation to continue. Very important thing. It's not a substitute to clients' accounting records. He had to ensure the detailed, complete accounting records as per whatever limited accounting standard applicable at the MSME or the tier 1 entities. Right? Auditor would do the documentation. The extent of the documentation depends on the various factors such as risk assessment, sampling method, if at all used, and of course the materiality. Permanent audit file and current audit file, the concept need not to be explained. The documentation shall contain relevant risk and controls applicable to an area, assertion to be tested and satisfied, substantive and analytical procedure if at all being performed by the auditor, physical or electronic format, hard copy, soft copy of the documents, plan, engagement letter, at all you have given a modified opinion, modification in the nature of qualification, and document relating to the use of professional judgment, relating discharging the all old suppressed information, and retention of this record shall be done for the 7 years as per the SQC 1. This is all about the documentation in general essay 230. Though I have not taken the entire essay as on the very proper time, we need to conclude. Now I am coming to the list of the requirement of documentation given in the various essays and where and what the auditor need to keep in mind. Let's go through one by one with respect to each one of the essay, where it is some more details to be covered up. We had included a couple of more slides over here, or at least I'm trying to narrate. I try to narrate few basic conditions with respect to this. Start with essay 200, which talks about the basic principle governing the audit. That's what is the mention in the objective as well. Evidence that audit was carried out in accordance with the basic principles. One of the basic principle was judgment, and I used my judgment in deciding whether or how I would depart from that base, etc. So these all, as and where required, need to be well documented. 220, which talks about the quality control in the auditing work. A lot of compliances are there with respect to the who would be your quality control reviewer, audit evidence to obtain that substantive audit procedure and conclusion which are drawn therefrom, including the results of consultation done, if any. Right? So these 220 will require a detailed auditing. 240, 250, very interesting standard. Objective of 240 states what? Auditor's responsibility relating to fraud. Considering the possibility of fraud, he is not responsible to find out the fraud, but at any given point of time, he has been observing any circumstances which alerts his antenna there might be fraud. Persuasive audit evidence which may pursue him to go and extend his auditing requirement or methodology details into a particular area This is how he shall be considering the possibilities of fraud into the auditing while doing the audit of the entity for the relevant period. I would be recording what suspicious transaction which I would come across. I would have given a benefit of doubt to certain suspicious transaction, but frequent repeat of those suspicious transactions made my doubt stronger. Then what auditing procedures I applied for? Instead sampling for a particular period, I went into the details, or maybe ledgers of certain selected parties giving the suspicion indication were checked in detail. Test of control with respect to the payments or whatever of those parties were further checked and see if those who are entrusted with the power had they overridden the power or not. And these all is required to be well documented by the auditor, because the moment in the next coming years, if any fraud is reported or found, then I might have to go and appear and prove that although there was some fraud going on, but did not came to my notice, although I did these all procedures, which is narrated in this particular standard, stating auditor's responsibility related to the fraud in the audit of financial statements. Right? So understand of the entity, its control environment means here. Assess risk of material misstatement as per your SA 315, management responsibility, communication with them, regulatory requirement like Companies Act, RBI in case of the financial instrument institutions, reasons for conclusion and reporting which the auditor does, and a detailed list of every such transaction which you thought to be suspicious in nature. 250, consideration of L&R, law and regulation in the audit of financial statement. One need to make the various checklist of the applicable law and regulation like RBI, NHB, corporate governance, and what not. Friends, knowledge of the client's business is one very important concept. Earlier, there used to be a separate standard. Now, into the new standard, two of them have been merged, and in the initial paragraph, it is included in the other standard. At the knowledge of the client's business state, this point are to be documented well. For example, to this particular client, I am auditing. What all law and regulation are applicable? I would be very clear with the law and regulatory requirement there is to ROC, GST, all revenue laws, maybe local revenue, maybe labor laws like PF, etc. Because in my tax audit report, I might have to disallow them if it's not paid before the respective dates and all. So, if it pertains to labor laws, revenue law, and all this, I would be having a ready checklist. Okay, I'm adjusting the volume. Okay. I would be preparing a detailed list of the law and regulation applicable and see, am I required to comply with them? No. Who are required to comply with that entity? Those who are charged with governance, different department. I'll see to it whether the compliance is being made or not. Is it that relevant? Yes, sir. As I said, some of them, if not complied with, would result into your disallowances, etc., in your tax audit report or somewhere. Or in some of the cases, the law and regulation are such important part that compliance or non-compliance with some of them may be very much material as to endanger the existence of the entity. Yes, my friends, it might affect the going concern of the entity. It might create a huge contingent liability. For example, that is a chemical company or a pharma processing plant, specialty company, whatever, specialty chemical company, whatever, and discharging huge polluted water. GPCB here in my state, similarly, the pollution control board of the respective state, it's a state subject, would be requiring in while giving the clearance that you might have to install ETP plant, EHTP plant, or what, periodic auditing, periodic renewal of the certification, and still the reports to be kept before and after the treatment of effluent done. What was the level of pollution into that water before it was discharged into that public places like maybe the sea or other thing? Not complied, and the power of that pollution control board is as high as to issue the closure notice to the unit. Might close or not, that's a different story, but a news single coming that a particular unit has been issued a closure notice, how much material would it be? You as an auditor, being a chartered accountant, we can do that judgment. So at the initial meetings, apart from the revenue law, labor law, Companies Act and all, I must understand all such material act applicable to each company. Every company using the boiler are supposed to comply with the rules regulation given by the registrar of boiler of the respective state coming under the Factories Act, Industrial Act. And as per those requirements only, that is to be complied with. Complied with, no penalty, sometimes a huge notice as large as to affect the going concern of the entity. And this is what is the seriousness of this consideration of law and regulation beyond just disallowing certain payments made beyond due dates. Here my approach for the documentation, suggested approach for the documentation shall be, I must have a detailed exhaustive list of the law and regulation applicable and a checklist whether the yearly compliances have been done or not. It's not difficult to comply with this. Difficult is to make a checklist. That's the reason I tried to elaborate this particular standard in this particular fashion. A very important standard is about communication with those who are charged with the governance. Those communication are to be done in the formal way, that goes without saying. Even if the electronic manner email done has to be properly preserved and kept on the record for the auditor. If the recipient, on the other hand, is a more formal authority or the arrangement like audit committee, it has to be equally well drafted. But even at the MSME smaller entity level, certain thing which you told them, it was not perceived, understood seriously, and you thought that it might cause a serious problem in future, then more proper formal way of communication to be used, documented well, oral communication preferably not to be used. The standard has mentioned that whenever I do a oral communication, following that it should be backed up by an email or such other communications are as discussed, be communicated is this, right? So this is about the communication, those who are charged with the governance or at the smaller entity with the owner, where you have done at most time the informal or sometime the oral communications. 240 I discussed earlier also. It's very important standard. So what should be kept in mind, documented, or responsibility of the auditor, or what are the challenges? Lack of awareness of the auditing firm in showing the professional skepticism throughout the period under audit. It is very close family who is managing the business. No, there is no possibility of fraud. Why? I am asked to remain skeptical while doing it. Documentation containing the background of the client was found to be lacking. Related party who is there apart from the owner, or he's one or two family member having larger important responsibilities, as we discussed in the earlier characteristic of the MSME. Based on the documentation available, was it difficult to conclude whether the fraud risk was considered during the audit of the financial statement or not? One of the major fraud risk factor over here would be the related party transactions, and in certain cases, the revenue recognition may be as. So this is one point, a little elaborated. I wanted to draw your attention to SA 240 addition to what I discussed already. Further, joint auditor at MSME level, certainly there is not going to be the joint audit, but wherever we do have a joint auditor, the responsibility of the auditors vote should be, generally it is being divided very categorically by the auditee or in the meeting with the audit committee. Define that there is standard is also very vocal on that. There are certain areas on which both the auditor or all the joint auditor will be joint and severally responsible. What are those areas? And a clear understanding and documentation with respect to the same must be there. Planning of an audit of the financial statement, well documented audit plan, and against the audit plan, equally the documentation of execution to be recorded well. What had been decided in pre-audit meeting, overall audit strategy, which the auditing firm has planned to adopt, plan and significant changes and reason thereof. So planning of the audit will require again a lot of documentation, and very properly that need to be well documented. Then there are standards with respect to the risk. For that, first I need to identify the risk. Then I need to see what are the procedure to mitigate those risks by the management, of course, the control mechanism to bring them under the acceptably low level, and the results of the same. Do as an auditor, do I accept that entire 315, 330, 450 all together would be ultimately talking about. You should know the procedure, which procedure causes, raises certain risks. Are there proper controls? What is the result of your taste of controls? Whether those controls are operating effectively throughout the period under audit. Are they designed, operate, and implemented well so as to bring down the risk to an acceptably low level? Do the discussion among the engagement team, significant decision reached by them, understanding the entity's environment, their internal control components, sources of information from which the understanding was obtained, risk assessment procedure the auditor performed, and as a result of that, identified, assessed the risk of material misstatement at financial statement level or maybe at the assertion level, risks which are identified related to the control about which auditor has obtained the understanding, the taste controls, which broadly said, reporting on the IFC which are required under the Companies Act. This could be the various requirement of documents in complying with SA 315. Further, materiality. What do I mean by materiality? Materiality means what? Bringing at the knowledge a certain thing to the person, users of the financial statement. Disclosure or non-disclosure of a certain item would change its decision. That item, that amount, that fact would be considered to be material. The document shall include the following amount, factor considered in their determination of materiality at the financial statement level as a whole, if applicable, materiality level or the level of a particular class of the transaction, account balance, or at the disclosure level. Materiality would be defined at the overall financial statement level, certain disclosure with compliance with the law and regulation as I discussed, certain transaction level, then performance of the materiality, and performance materiality and any revision of the materiality level as the audit progressed and reason thereof. According to auditor, what is material overall or at the respective assertion level has to be well documented, and if at all there is revision in the level of materiality which you assessed earlier, maybe at the beginning of the audit, at the interim audit, but now it changes at the final conclusion, that all things should be well documented. Now, the risk which has been already identified in your assertion of 315, then here, what do? We give the response to the risk which has been assessed earlier. Okay. The overall response to address the assessed risk of material misstatement at the financial statement level and at teacher timing extent of further audit procedure to be performed, keeping in mind the risk assessment which is done as per 315, linkage of those procedure with the assessed risk at the assertion level, a result of the procedure, including the conclusion where there is no clarity otherwise. Conclusion reached about whether the internal controls are effectively operating or not. In case the auditor had relied upon earlier based on the test which was carried out by him in the other audit period, and the auditor's documentation shall also include and demonstrate that financial statement agree or reconcile with underlying accounting. 315, you assessed the risk. 330, you are responding, recording the response, documenting the response to that assessed risk. Further, this as a 300 family together, if we have to put into a slide that talks about 300 planning, strategy, risk assessment, whether documented or not, control like IT controls, whether validated or not, 320 materiality level, documented or not for all or certain classes of transaction, and response 330 backup for the test of control and balances available, documented or not. That's the clean summary of SA 300 family and the documentation required. Now the 500 family, which talks about what? The audit evidence. As I mentioned earlier, audit evidence is what? One of the document of the total documentation which I did. And this evidence would be based of my conclusion, assertion, opinion in the auditor's report. Like external confirmation. If the auditor agrees to the management request not to seek external confirmation regarding a particular matter, departure from the regular method, then auditor should document very clearly the reason for ascending to the management's request or not agreeing to the management's request. Why was he prevented from asking direct external confirmation, and when, how he accepted that and performed the alternative audit procedure and obtained sufficient appropriate audit evidence. Regular procedure is what I would ask for the confirmation, but here on certain reason I was not supposed to do that, not requested not to do that, then it need to be well documented, right? So this is how these points would be required. Documentation, auditing for accounting estimates. The basis of auditor's conclusion about the reasonableness of the accounting estimate, a disclosure that gives rise to the significant risk and indicators of possible management bias, if any. Related party, at length we discussed in the beginning. Auditor shall include the name of all the related party, no, all identified related party, which by all procedure he could got to know. Later on, if somebody is a related party, by any audit procedure it didn't come to the auditor's notice, then he is not responsible. That's the reason the standard has used the word all identified related parties and the nature of related party relationship the entity and that party has. MRL, management representation later. In next 3 slides or 2 slides, I had given you the standard MRL list, which bare minimum, where applicable, auditor should obtain. Auditors, and yes, a caution before I get into that. management representation letter is not a substitute of performing audit procedure. Instead performing audit procedure, I might ask the management to give me a letter. No, that's not acceptable. Auditor is required to document identification of the significant usage of relating to completeness, integrity, ethical value, diligence of the management, or about its commitment to or enforcement of these matters, where auditor has relied on the management's explanation, information, or request in certain cases. I'll not read each one of them, but later on you can use this list. All this MRA may be suggested list to be, maybe one MRL can include various, like fraud. Whatever fraud is known to the management, I should be giving the list of that, like, right? Accounting policies, selection of the FRF, contingent liability. They have given certain warranty and guarantee on the number of pieces sold during the year of some consumer durable item, right? Capital commitment, deferred commitment. So as per the requirement or the accounting record, amongst this, whosoever shall be applicable, I would be asking for those MRLs. Further, few points related to these essays which talks about audit evidences. Backup not maintained for validating the date of the given accuracy, no control over the external information, failure to test the opening balances, methodology of selecting sample not documented, management assertion not tested or not documented, MRL or letter of representation does not cover the key auditing aspect, no working for analytical procedure conducted. These are the challenges, or these are the point where the auditor lags in compliance with these set of standards. Now, two set of standards are there. Very quickly, we shall conclude using the work of another auditor at MSME level. It shall not be there. So I'll not be reading all these things, but if at all you come across this kind of the relationship, these are the points we would be keeping in mind. And similarly, using the work of an expert, using the work of an internal auditor, this would be the few aspects related to the documentation auditor need to keep in mind. The reason of skipping this entire reading is the discussion I'm trying to do, keeping in mind the MSME, where this largely shall not be applicable in most cases. Conclusion and reporting SS 700, 705, 6, 10, various other, and last couple of years back there has been requirement of, amendment into the same, adding the KAM and other thing. So everything which I report has to be backed up by certain proper documents. So auditor report issued in the old format, that is not as per 700, but the newer format, auditor's responsibility, not worded appropriately, name of the signing partner, membership number, UDIN, qualification, basis of the qualification, where EOM, emphasize on matter paragraph or other matter paragraph, as and where required, have you given to draw the attention or not. These are the few points with respect to SS 700 I need to keep in mind at the time of documentation. Work not documented is as good as work not done. Poor documentation depict poor performance, even reflects firm's procedures. Emphasize on the use of detailed checklist ensures completeness and compliance with all the standards. Significant responsibility cast on the auditor under regulatory framework. When things go wrong, the onus of the auditor is to prove that he was not done professional negligence. Auditing standard neither favor nor discriminate based on size of the practitioner. Understand this line. Guide for new team member, also assist in reviewing the work of the team and also serve the purpose of ready reckoner for the subsequent engagement. These are the few more thoughts with respect to the documentation I thought to give, listing down of few common error which are observed. Other matter paragraph not given when there is a change in the auditors. In case where Caro reporting is not applicable, reporting is required to mention in such fact, main report should require to mention such fact, separate report issued on the IFC, responsibility paragraph includes opinion is required, not required, UM not given for negative net worth, going concern not properly addressed into your report, inconsistency in reporting for standalone or consolidated financial statement not applicable at the MSME level, qualification given in the previous report but not continued in this year, and cross reference given for pending litigation or the dispute. So these are the compilation from the various institutes publication only regarding common error which are found in the report as well as documentation. Kara and other thing I don't want to get into the greater detail, but challenges as to the MSME I have tried to conclude here. Kara talks about what? Control activity relevant to the audit, performance review, information process, physical control, segregation of duty. Important, relevant to the audit understanding that assessing the risk and subsequent response. Particular 3 bullet point at the bottom of the slide, MSME. Some concept here related to the Kara shall not be as formal as we see at the corporate level. Some may not be relevant because segregation of the duty would be done when there are many people to look after those duties. Here, the direct owner is oversighting those controls and relate mainly to the transactions. That is about the Kara and relevance of that at the auditor's level. These all points may be the peer review mechanism, digital documentation, working paper, etc. I discussed at one or other point. These are the material for preparing the material which I am sharing with you had been used by me. And thank you so much for patient listening. I know I had a goosebump seeing 900 plus participants on the other side, but I am sitting alone in my room over here. Thanks to the technology and WRC, through this platform, we today could connect, and I hope I've done justice to the subject allotted to me. Thank you so much from my side. Over to Anushri ma'am.
Thank you so much, sir, for your valuable time. I would like to propose a heart. Sorry, before that, I don't think there are any questions to take up. Participants, if you have any questions, we request you to please put them in the Q&A box. Maybe we can wait for a couple of minutes and then proceed ahead to wrap up the session. Okay, so I, Anushri Gupta, on behalf of WIRC and its entire fraternity, would take this opportunity to propose a very hearty vote of thanks to our today's faculty, Mr. Nayan Kothari. Thank you so much, sir, for sparing your valuable time with us today. And it was a pleasure and delight to have you with us today. Sir had taken us through the compliance with auditing standards from an SME perspective. Sir, thank you for taking us through the minute aspects which generally we as members, auditors do not pay so much heed to such minute things. But thank you, sir, for bringing them light to us today. Thank you to our participants who are with us today for this webinar. Thank you so much and have a wonderful day. Thank you, sir.